Americans are finding even more excuses to shelter themselves indoors and avoid sunlight at all costs. With government debt mounting as quickly as it ever has, new numbers are showing the country's net worth dwarfs the debt. And how confident are you really about your investments? This does not include your collection of Billy Beer six-packs waiting for the value to really top out. Welcome back to MidPoint, author of the Wall Street Journal bestseller Aftershock, Robert Wiedemer. Robert, thanks for being here.
Yeah, thanks for inviting me.
My pleasure. We look at what happened on the street today, and people taking a little money today, down 140 points.
Yeah, I mean, I think we've got a situation where, of course, the numbers aren't great, earnings or on the economy, and you got a situation where there's no money printing. That money printing, I think, is a lot more important than people want to admit. Without that, we're in risky territory.
Well, we're going to talk about money here in a moment, but let's go ahead and start off with a few things. Well, I'll tell you what, let's just go ahead and start out with this money here, and this story that came out of the Wall Street Journal. Americans' net worth reaches a high of $84.9 trillion. All right. The casual person will look at that, they'll say that's an awful lot of money, but what does it all really mean in this report?
Well, I think what it really means is we've got big bubbles in both stocks and real estate. That isn't due to income or necessarily economic growth. That's due to the same assets, the same house, the same company, same earnings, just being valued at a higher level. That's where I think it's people say, oh, it's hard to see a bubble. Except when you're in it, well, sure, because when it's going up, everybody says that's a sign of great wealth and prosperity. It isn't necessarily. It's a sign of an asset bubble.
Well, so I guess here, in the Wall Street Journal article, they're saying growing wealth should give more consumers the ability to boost spending, which they're calling a key pillar of the economy. Is that true?
Well, it would be true if all that wealth was going to a large number of people, but it's not. Most of it's going to a very small number of people, and we had that been growing for a few years now, and yet we're not seeing consumer spending rising that fast. We're certainly seeing that being more troubled by income numbers and by lack of income, lack of wage growth. I'm sure that wealthy people are spending, but it's not showing up in a lot more spending over the last few years, necessarily just because of the wealth.
Which is exactly what they're pointing out here, exactly what they say. They're talking about the affluent who tend to own stocks, save large portions of their money. So there you go. That's exactly what the interest level of it is and exactly why. Speaking of that, and let's go ahead and go to this, the stock portfolio, because many people who are very wealthy have stock portfolios. But here's a rule, and this came from Investors Business Daily. Flagship sell rule, always cut losses at 7 to 8% below your purchase price. Do you agree with that?
I tend to in this market. I'm not sure that would be what I would normally do, but this market is so driven by momentum, so driven by psychology, government policy, that I don't have a conviction on any given stock or earnings. I think that's probably a good move. Stay away when the trend is down, because the trend is really all that's supporting this market, and so be careful when it goes down.
And I got about a minute left, so let's go ahead and talk about some product here. We'll finally get to this. Oculus, Facebook owns this, a virtual reality company. The first actual consumer product as a machine built for gamers. I swear we're going to look at a time when everything is going to be virtual reality. We're finally stepping into the realm of science fiction being reality here, are we not?
I think we are, and I think the fundamental attraction of video games and video is here to stay. I know it bothers a lot of people who grew up on a little bit of TV and no video games, people of my generation, but I think it's clearly, you can see with kids, they just get a tremendous amount of entertainment out of it. For better or for worse, it's here to stay, and I think it's just going to get a lot bigger.
And it's going to be not just kids, right, Robert? We're talking about adults who are probably going to go and buy into this. This is a huge margin.
It is huge, and again, all those kids will become adults. So I agree with you. Some adults are certainly going to move into it as well, but you're building up a very long-term market because all these kids will be adults.
I know some adults right now, probably over the age of 40, who will go out and buy one immediately, and we will never see them. They will still be in the basement somewhere, while the rest of us are actually out in the sunshine. Robert Wiedemer, want to thank you so much for joining us, my friend. Have a great weekend. We'll see you again.
You do. Thanks.
All right, take care. Coming up next, more troops in Iraq. And here's the question. Why not just make them permanent? Does it not make sense at this time? We'll talk about it next, right here on MidPoint.